The big action that the markets will watch out for today, Tamanna, is going to be earnings from the IT bank.
Yes, the Q3, frenzy of earnings begin, and with it, the big boys, IT, big ones, Infosys and TCS. We're going to have a very clear preview for you and inputs of all the scenarios that you can possibly see with these two results, how it will kick off the entire season, and especially for the IT sector. But just very quickly, let me go through what the cues are globally, and suffice to say they are good, they are positive. US stocks have closed higher overnight ahead of key data that is expected today. Remember, CPI for the month of December is expected, and 3.2% is what is estimated. Now, why is this important? If I had to say it in Hindi, it's a doodh ka doodh, pani ka pani moment. If you're expecting the Fed to start cutting rates, the data, the economic data, has to also tell that same story. So, which is why that data is important. The US 10-year, in fact, showed that volatility dipped below 4% at one point, but has ended up above 4% as well. Oil, the other big story, record kind of inventory of crude in the US, which has made it very clear that there is going to be a glut. Just to give you perspective, 1.3 million barrels in the week ended Jan 5th in the US were seen, compared to an expectation of a drop of 700,000 barrels. So you are seeing enough crude, also fears of demand coming in because of these high inventories. And last but not least, I must put the focus on what's happening in Asia, and we'll pull up Asia stocks. The Nikkei, on a dream run, is above 35,000 right now, and these are the highest levels for this index since 1990. So Japan, economy is looking good. Asia is firing. Look at it. All the indices, they're up in the green. Nikkei up nearly 2%. Does that portend for what we're going to see in India is the question. And, that really is what we will look at, Samina. Even though FIIs were net sellers yesterday, DI has bought about 2,000 crore rupees. The focus over here, or the basic premise over here, does look positive at this point.
It does, actually, and in fact it looked positive very surprisingly towards close last in yesterday's trading session. So after spending most of the day in negative territory, the markets, remember, staged a very smart recovery towards the last 45 minutes of trade. They took the markets from the day's low point to close in positive territory. The Sensex and Nifty both added significant gains. The Nifty 50 went home with 74 points, ending the day at the day's high. The VIX as well dropped about 2% giving some comfort to the bulls. The PCR, on the other hand, has actually risen marginally from 0.88 to about 1.06, indicating the increase in a little bit of bearish sentiment. Now, in terms of cues, remember, Tamanna mentioned you've got that inflation data that US markets will be watching out for. Oil also is down about 1% in yesterday's trade, and on Tuesday as well, what we did see was the markets taking support at the 20-day moving average, which is 21,488. That, remember, will be an important level of support for the markets over the next couple of weeks. A breach of that could take the Nifty back down to levels of 20,973, which is your 40-day moving average. On the upside, of course, if we take out 21,763, we could be headed all the way up to 21,800. But that is being a little more optimistic. Today we also have Nifty expiry. So a range-bound session with a positive bias on back of strong global cues is what we are expecting. And in terms of sectors, Bank Nifty pulled back quite smartly in the last sort of trade yesterday. After spending most of the day in negative territory, Bank Nifty went home with marginal gains. 47360 is where we closed trade at. 4832 on the upside is what you're watching out for, and on the downside 46720 is going to be important, as that's the 40-day moving average. In terms of important trading activity that happened and helped the Nifty higher yesterday was Reliance Industries. It started the day quiet, spent most of the day consolidating, but by the time we shut shop, Reliance Industries went home. If you can just pull up RIL on the screen, it would be helpful to see the kind of move that we saw on RIL. Went home with gains of nearly 3%, and a large part of those gains coming in the last 1 hour of trade. Along with that, you also had stocks that managed to hold up quite well. HCL Tech, remember, they'll be reporting earnings tomorrow. The stock managed to pull up gains of about 2 to 3%. Cipla had a pretty present day. Vedanta, which started down about 1.5% lower, Tamanna, on back of that Moody's downgrade, very interestingly gained, I think, 3.5 to 4%, and that's the chart right there, from its intraday low on back of a brokerage upgrade. Nuvama, in fact, turned around and said that this was not really going to be a concern, and the markets took to that, and the stock got rewarded, closing the day with 3% gains. I'd like to see what happens on the stock today, but very, very smart move coming in. And all of this has happened in the last 1 hour, which was a little surprising.
You know, you're seeing that trend about the last 1 hour of trade becoming very definitive and sometimes moving away from the trend line that you've seen all day.
Yeah, it's
most of the day.
Opposite, right?
It's been happening for the last few sessions, so we'll see what happens today. Though the last 1 hour, or the end of trade today will be interesting because the big news flow is going to come post markets. Having said that, let's talk about some counters which are going to be in focus today before we come to the big IT piece, and Polycab, I would say, on top of my list. The news flow on this counter has been consistently negative, and yesterday after market close, we saw a big story come out from Finance Ministry sources talking about how the IT department has detected unaccounted cash sales of 1,000 crore rupees post search and seizure. Remember, all this time there was a figure of 200 crore rupees of tax evasion. The company came out and gave its explanation, and the stock recovered during close as well. But now that figure has become much bigger. There is 1,000 crore rupees of unaccounted cash and a payment made by a distributor to the tune of 400 crore rupees, which is also unaccounted. We're going to, in fact, have a deeper conversation on this ahead on the show to understand exactly what this Polycab story is. But suffice to say, you can expect to see a big stock reaction. SpiceJet is another one I want to talk about, and we already had seen SpiceJet showing quite a sharp up move yesterday. After that, you've had more news coming in to support that kind of a move. It was up 5% yesterday. But now we know that SpiceJet was expecting a fund infusion that's come in to the tune of 2,250 crore rupees after the board meeting. Some of it will be used to pay debt, but the outlook from the management also talks about its expansion plans. So they're going to start flights to Ayodhya. They're going to start flights to Lakshadweep. They say they have exclusive rights to begin flights to the largest island in Lakshadweep. And that ties in quite interestingly with the entire trend of providing an alternate to Indian tourists who don't want to go to Maldives anymore. So you could see that play out in the stock price today as well, apart from all of those tourism-related stocks which have been responding because of Lakshadweep, but more so because of the kind of influx you're expecting in Ayodhya. Phoenix Mills is another one I'll talk about. Real estate has been a sort of very steady kind of a space which has been performing in terms of its performance, and those business updates are watched carefully. Phoenix Mills doubly interesting because it's giving you a sense of what's happening in the real estate space as well as on the consumption story. So their business updates are looking good. Gross retail collections at 700 crores. That's an uptick of 30% year on year, and total consumption is also up 24% year on year. It'll be interesting once the numbers are out for Q3 to see the details of that, because while we're talking about an overall consumption slowdown, what segments is it in? Are we seeing it very different, a different hue of this when you're talking about a Phoenix Mills or urban consumption or more discretionary consumption? So those are some of the stocks I thought we could talk about. But there are a couple of more on your list today, Samina.
Tamana, I just want to talk about Polycab for a minute. I mean, the market cap of this company, so while it is significant, it's 73,760 crores. So it's a fairly large mid-cap stock. So this news flow will be significant. But 1,000 crore hit, and assuming this comes through, if I just look at the kind of numbers they've posted in September 2023 quarter, this top line came in at about 4,218 crores. Profitability stood at 430 crores. So if this has to come through and play out the way the market may be looking at it, of course, there's going to be so much back and forth on this. The courts will be involved. Appeals will be made. Nevertheless, if this does play out the way it does, it's going to be a huge shock for Polycab. You're wiping out, couple of quarters down the line profitability, a whole year's profitability.
So typically, tax claims and what companies finally pay
is a huge difference.
Become very, very different figures. But it's more of a reputational damage than anything else at that point. At this point, I suppose.
I mean, and I think that potentially could be priced in 200 or 1,000. I guess in the quantum is the only difference that we're looking at. But just to put that in perspective, it's a 74,000 crore company with market cap. It reported profits of about 430 crores in the previous quarter. Top line stands at about 4,000 odd crores in the last quarter. Along with that, lots of other names to watch out for. Not that many actually, but you had Bank of India. Their business update came in pretty solid. They've registered a 9.9% increase in total business. Deposits have increased 8.5% to close at 7.10 lakh crore rupees. Gross advances have also risen about 11.5%. Remember, a whole bunch of these PSU mid-cap banks have actually reported very solid business updates. We've seen the reaction to those counters. Most of them have done well post their business updates. So I think Bank of India should be one on the radar. A positive reaction cannot be ruled out in the early hours of trade. Well, two other companies, board meetings expected, not today, but on Monday. You've got Angel One and Safari. Angel One is considering a fundraise. I remember they reported one of their best quarters in terms of a business update, with maximum number of client additions jumping about 60-odd% quarter on quarter. Year on year as well, the number looks solid. So Angel One looking at adding more funds, capital expansion. Funds could be directed, of course, towards expansion, marketing, adding new clients, and offering a better product mix. Safari, on the other hand, this is a story in itself. We will try and connect with the management, all the investors into Safari, get a sense. They've got a board meeting too on Monday. Fundraising is what the firm is also looking at. Along with that, a quick update on Nuvama. Nuvama and Cushman have signed a joint venture for a real estate fund. They would be looking to raise 300 crores to invest in commercial real estate space. So probably a REIT in the offering, could not be ruled out, but interesting to see how this JV actually plays out. Nuvama, remember, focuses on the financial asset piece. Well, but the bigger story, and the story that is going to be the big headline today, is IT. Sajid is standing by with more on that. Sajid, it's expected to be a muted quarter with TCS and Infosys both reporting their numbers later today. And this quarter, historically, because of the number of holidays we have, is generally quiet, right?
That's right. Good morning, ladies. To begin with, it's going to be a muted quarter for the entire IT sector. If you look at the sector as a whole, to set it up, before we go into, Infosys and TCS in particular, the revenue growth is going to be muted in the sense that it's going to be flat to negative for some of the companies. We've seen that coming in the Q2 as well. Some of the companies are facing some of the issues with respect to execution of the discretionary orders, which are hardly to come by, and if at all they're coming, the starts are getting delayed there. There's not much of currency cushion which is coming in for these companies as well, because the rupee against the dollar may have gone up, but against the euro and the pound, they have been weaker in that sense against the dollar there. Margin is going to be under pressure for them. They will continue to remain under pressure. There are going to be some challenges with respect to cost which is coming in there. It's supposed to be a soft quarter because furloughs is a quarter of furloughs, but what we are hearing is that the furloughs could be a little longer than expected, and so the revenue recognition will be much more slower in that sense. Demand continues to be uncertain, and it will continue to be till the next couple of quarters, till you have some certainty on the Fed rates cuts, which the street is trying to price in, and as a result of which the BFSI is going to pick up from there, especially in the US market, which continues to be the biggest market for the IT companies. And as I said, discretionary spend is virtually absent, and if at all there's some signings happening, the starts are getting delayed because management want to push it to the second half of calendar year 2024. So from an Infosys point of view, Infosys is something is going to come in from it's going to be muted there. But before I go to Infosys, I just wanted to look at the Nifty IT, how it has performed. from a 12-month point of view, it's not a bad performance, 22% returns coming in for Nifty IT, but it has slowed down in the last 3 months. 3 months is around 6 to 7%, and for 1 month it's 4.3%, which is coming in, and that's largely led by some revival of hopes that things are going to turn around in the second half of FY25 for some of the companies, and that's getting priced in some of the prices for larger companies like an Infosys or a TCS for that matter. Samina?
Yeah. With this, just Sajid, before we go on to get some more details from our analyst, I think one big talking point in the IT industry has been poaching veterans and change of leadership moving from one company to the other. Now with TCS, I think they were one of the lucky fews where we didn't see that, but I believe there's going to be a big leadership move in this year with their COO retiring. Is that correct? And would that be significant is all I want to understand.
It's not going to be significant, but before I come to TCS in specific, I just set it up for the Infosys, the price which is going to, the revenues that are going to be coming in, it's going to be muted revenue. There have been some setbacks for Infosys in this quarter because of one of the big clients' orders which getting cancelled, $1.5 billion. So there is going to be recalibration of TCV which is going to happen there. TCV to revenue conversions are getting slower for Indian IT companies, and Infosys is also facing the same. Though these companies are announcing good total contract values for every quarter, that's not getting converted at a faster pace so that they can book revenues, and that's where it is going to be. So dollar revenue for FY24 is going to be flat for Infosys there. The hiring is something which we need to look at from a point of view of how they look at the demand coming in there. It's going to be muted for FY25. So if someone is looking for FY25 guidance, it's not going to be just the numbers but also the number of employees that they're going to hire in FY25. That's something which needs to be done. TCS, again, revenue in dollar constant currency terms is going to be flattish, which is there. TCV above $7.5 billion is something that to watch out for. If they are able to get that TCV, that means that they are able to book more orders, which is there. Again, TCV to revenue conversions are again slower for TCS there. US BFSI space has been good. Q2 we saw good kind of growth coming in there, but outlook for 2024 calendar year and 25 is something which needs to look out for. Healthcare and retail has been slow. We've seen that coming in commentaries from Accenture as well, where they have spoken about slowness in orders and executions coming in. UK, which is a significant market for TCS, is also going to be a bit softer in Q3 for that matter, and the margins, they have given a margin of 20 to 22%. We need to see how they fare in the margins, though there will be some pressure coming in there. As far as what Samina was talking about on the succession planning which is happening, I think TCS has already planned that when NG moves out after he retires, there would be others who will take his place, which is there. But this industry is seeing a lot of churn happening, especially in Bangalore. Wipro is the biggest, one of the biggest company which has been affected because a lot of CXOs have been exiting Wipro and going to rivals in various capacities as CFOs and CEOs of other companies.
Sajid, if I can just ask you about the big, on Infosys, especially the big knock that came, I think in news flow, was them losing out a massive deal of $1.5 billion, which they had bagged in the September quarter. So hopefully more details will be out by later this evening on what deal that was. But do you see this having a big impact?
So, what we know is that they had signed an MOU with a big client, which was for a 10-year deal, $1.5 billion. That deal hasn't gone through because they failed to sign the master agreement subsequent to the MOU being signed. We don't know the reasons why it got delayed, because it's fallen through. But it's surely going to have an impact on the fact that there is going to be a recalibration of TCVs which they have announced going forward. Also, Tamanna, while companies have been announcing TCVs, we don't know how many of the TCVs, are in play at any point in time, because they every time they sign an MOU or they sign a client, they put the number out as a quarterly TCV for the street to look at. But over a period of time, what happens to that TCV, whether they've been able to increase the contractual value with the client, or they've been able to reduce it, or they have lost out, or they have exited that client, those things are very vague for the entire industry. And I think it's time that the street start asking them about the amount of TCV they have got and how much actually is an active TCV book for them.
All right. Let's go across to Sandeep Agarwal, fund manager and co-founder at Sovilo Investment Manager. Sandeep, very good morning. Glad to have you on in this conversation that we're putting together to understand what's happening in the IT space. So first, your expectations from Infi and TCS later today, and just a word on the point that Sajid was making, that TCVs may not really end up being what they look like. Is that a figure you're looking at carefully this quarter?
Yes, so thanks and good morning for having me on the show. So, see, let me put it this way, as already rightly mentioned by Sajid, that, this is a quarter where there are a lot of furloughs from the manufacturing industry, and also there are more holidays. So obviously, this is not a quarter where investors are looking forward for a very high growth numbers. But obviously, this is also a quarter where, budgets get freezed. And by the time the results start coming, which is, in the first 10, 12 days of the new month, generally, companies have good sense how they are forcing the client budget, because client starts working with the vendors and they do communicate to them what is their idea about the next year, how they see the next year. And that gives some sense of how things will pan out. Having said so, TCV is only a, kind of indicator. You cannot analyze anything concrete from it, because it is not like the two-wheeler sector. You get the numbers, absolute numbers, and you can do the calculations. TCV is just an indication for any company, but it does shows you the trend that, how the TCVs are forming up, because finally, most of the companies don't change the methodology of reflecting the TCVs. So assuming that everything remains same and standard, the TCVs does give you a directional view where it is moving. Obviously, in TCVs, you should always exclude large win deals, which are one-offs, and large win losses to do apple-to-apple comparison. That should be the way it should be looked at.
Sandeep, the question is that when you look for the earnings of Infosys and TCS today, what are the three things that you're going to watch out for? Because TCS though doesn't give you guidance, it gives you indicators of how the environment is, and the street uses that as to extrapolate the kind of growth coming in. While Infosys gives some kind of guidance which is there on top line. Do you see a guidance change coming in from Infosys? And is hiring one of the metrics that you're going to look very closely, especially going into 2024-25?
No, Sajid, the industry is becoming very complicated. As you see in last few years, I've been tracking this industry for now 22 years, and things have been continuously getting more and more evolved and complicated. So it is not so easy to, relate manpower to the demand environment for multiple reasons. One, always remember that, the fresher hiring is generally much ahead of the actual time when these people come and execute. And secondly, in this industry, what happens if the demand is very high, generally the benches are very thin. So you end up in a situation where you have to hire very aggressively and you need immediate resource. And in that race, generally you end up hiring much more resources than you probably need. And if this demand then starts slowing down, or there is some kind of problem, then, it takes time also to, reduce that resources. So the net hiring numbers, despite, good growth and good revenues, they generally may show up for 3-4 quarters a negative territory and may mislead the actual demand environment, because the rationalizing of higher hiring which you have done in the past, that takes place. But having said so, let me put it this way, that, right now there is one impact of general AI and things playing out where, the efficiency is the key factor. And because of that, the earlier 10, 15 years back, when you were able to calculate the revenues based on the guidance of the manpower, that formula doesn't work anymore because of multiple reasons. One, the ratios of onshore offshore has consistently been changing, and number two, also because of this advanced tech platforms and technologies coming in, the equations are no more linear. But obviously, the commentary, which is generally gives you a great sense of how the companies are thinking. But let me also tell you, most of these companies talk only on facts. That means whatever they have seen in numbers in the quarter, they only talk about that. So the call whether the sector will do well in next 3 months, 6 months, 12 months, or not do well, that always remains with the analyst, or that always is a thing which the investor has to take a call, because unless you take that call and take the risk of going wrong or right, you will not make money. So if you see the only thing I would say is that for company specific, attrition is a very good metrics. So if the industry attrition is, let's say, not going up sharply and one company's attrition is going up, then it is a clear sign there are troubles in the specific company, because a company specific attrition suggests that the company is not able to achieve what it achieves, because the variable pays are linked to the performance of the company, department, and the individual. But if the industry attrition is going up, generally it is a lead indicator of very strong demand environment coming in, which we saw in 2021-22. And when attrition start falling very sharply, then for the whole industry, it do suggest that growth will be little challenged in the near term. But as I said, now this industry has moved to the lateral hiring model and immediate hiring model. So what happens is that in this quarter, if they are not seeing good demand and deal, they will not hire at all. And then next quarter, if they see good demand, they will go and immediately hire a lot of laterals to fill that demand. So little complicated it has become versus past.
What about wage inflation and subsequent impact on the margins? Are you going to see that also one of the key factors as we look into it?
So, very interestingly, if you see last 15 to 17 year data, every time the quarter when wage hike is given, there is an impact of around 180 to 220 basis point on margins, and then it gets absorbed over the period of time. At the end of the year, everything remaining same, the industry has been seeing a 60-70 basis point of decline in margins. Now, this is a steady state thing when your attrition is in normal range. But if your attrition shoots up, these margins collapse, which we saw in from beginning of 2022, and because of which stocks started falling despite very strong revenue growth, the margins fell very sharply, and the reason was that the attrition was through the roof. And the vice versa is also true. So my only limited submission will be that, in this quarter, people may be positively surprised on the margins, because attrition has fallen very sharply in last 4 or 5 months, and that will start reflecting in margins. So on one side, you will have wage impact, low growth, and all those things. But the biggest margin leverage in this industry always has been the attrition. So if your attrition is low, your margins will come through, because there is a lot of cost related to attrition, the replacement cost, the training cost, and many other costs which are associated. So I would say that, I see this industry like this, that this is not the quarter where revenue growth will be good, but this is the quarter where margins should show positive surprise, and next 3-4 quarters you will see margin-led recovery. And then in 3-4 quarters, you will see some growth coming back, that is second half of FY25. So that is the way we see the industry. But, the stocks have run up quite a bit in last 4-5 months. So the bottom always in the industry has been made when, one of the companies stop wage hike or they stop the variable pay, which happened in month of August. And that was the bottom of the sector in my view. Now we are in a place where, decent money has been made. But from here also, there is some value in the large names, but not in the mid names. And I would repeat that, the recovery will be margin led and not revenue led.
Sandeep, very quick question. What do you think on HCL Tech? Because I believe they would be the ones reporting better earnings than its peers. And also your expectation on Wipro. And in pecking order, how and what are your bets amongst the 3-4 big IT companies at this stage before they report earnings?
So, HCL Tech has a little different seasonality compared to Infy and TCS. And hence, the expectations in the market are around 4.5% kind of constant currency growth. And there is obviously in this quarter 40-50 basis point of negative impact of cross currency. So I think that continues. So it will be the one of the best growth for the quarter, which in the large cap space. And also on the margin front, there will be some a little bit of expansion of 50-60 basis point in my view, because again, this is related to the product seasonality which is there. So I think, HCL Tech should report better numbers than Infi and TCS. In case of Infi and TCS, obviously, this is the weakest quarter for both of them. So in case of Infosys, we believe that revenue should decline by 1.5% around. And in case of TCS also, we expect there will be a flattish kind of growth in constant currency terms, and in terms of dollar growth, there could be even a slight negative. But margins, I think should surprise positively.
All right. Thank you so much, Sandeep. And thank you so much, Sajid, for joining us. Big evening ahead where we break down TCS and Infosys numbers and, just a quick pitch to viewers of why you should join us on NDTV Profit, because we'll cut through all the jargon and tell you what it actually means. Sajid's analysis is something that you should not miss. So stay tuned for that. Let me move to another company and corporate news that is bound to or expected to have impact on the stock prices today. I'm talking about Polycab. So the shadow of tax evasion accusations have been hovering over the company for the last couple of days. Yesterday, the company put out a very strong denial saying that there's no such thing, there's no 200 crore rupee tax evasion case. But what is making their case weaker is post-market hours, and after that denial came a very clear statement from the income tax department saying that it's not 200 crore rupees, but 1,000 crore rupee, actually up to a 1,400 crore rupee tax evasion case that is being looked at. So 1,000 crore rupees is in cash sales where they think maybe tax has not been paid. Another 400 crore rupees is because they have located payments from a distributor of Polycab, which was unaccounted for. Now, we've got with us Abhishek Rastogi, founder of Rastogi Chambers, to give us more perspective on the tax evasion part of the story. Abhishek, great to speak with you on NDTV Profit. Let's begin by understanding how the income tax department would have stumbled on this. Could this be because of the kind of scrutiny that GST now brings to the table? Can you give us a sense of how these figures or how this allegedly unaccounted cash sale would have been unearthed in the first place?
Today, Government of India is using a lot of artificial intelligence. So this artificial intelligence is used to track, for instance, purchases, sales, and things like that. So if they feel that there is some deviation between the two, then other departments also come into play. So for instance, if there is a deviation between the purchases and the sales and the GST authorities come to know about it, there could be repercussions under the income tax as well. Now, importantly, when all of these searches and investigation happens, the phrase which is used in the statute is reason to believe. The tax authorities, when they have legitimate reason to believe, can only initiate such search, seizure, investigation, etc. And hence, on their reason to believe, the entire investigation happens. But yes, to answer your question, these departments of the government exchange information, intelligence, data amongst each other now, and these investigations happen.
Hi, it's Samina joining in as well. It's been a while since we last spoke. But taking a cue from what you said, what, in your opinion, is the process to conclude this investigation now? Now that this is in public domain, investigations are being made, what's next for Polycab?
So I think important question. And see, the issue is like this. If I have the turnover of 4,000 crores and 4 crores of cash has been found, it is not whether some sales or purchases have been done in cash. The moot point which remains is whether these are unaccounted, how these have been addressed, what were my cash balances, and so on and so forth. Now, when the investigation starts, at the investigation stage, Polycab would not have much to submit. But what will actually happen is the assessment of this cash or these transactions will happen, wherein Polycab will be required to submit details that, what was counted, how it was accounted, what were the sales which were made through cash. And it may be possible that Polycab may not be responsible because it has the distribution channel So the distributor may come into loop, who will in turn also be required to justify how this cash was found, what were the sales which were made in cash, but how they were accounted. So all regulatory frameworks provide certain limits for cash sales, cash purchases, but that does not mean that, the entire tax demand could be justified or sustainable only on any apprehension. This apprehension will have to be concluded by way of an assessment wherein Polycab will be required to submit details and will have all right to submit such information to protect itself.
Abhishek, I'm glad you mentioned that because not all of it may potentially be genuine, right? This is very early reading. There will be discussions, there'll be conversations, maybe appeals going back and forth. Two questions in one. What is the risk of this to taxpayers and to Polycab? And more importantly, how genuine do you think this GST demand is at this stage?
See, generally, when we see these demands, we need to first see whether the process prescribed in the statute has been followed or not. For instance, if there is a reason to believe which the officer has had to raid my premises, how that reason to believe has been documented. Is it at its whims and fancies and at one fine day, there has been a search? So I'm not talking about this particular case, but generally what happens is you need to analyze the statutory framework and the constitutional rights and whether there has been any contravention with respect to these statutory and constitutional rights. So that is first part of it. The second important aspect is, which comes with respect to some risk element also, is that, for instance, if these are unaccounted sales or these are, expenses which are not correctly shown or not correctly disclosed, or some business expenses which cannot be legitimate business expenses, the risk of the companies in this case is that the interest and the penalty will keep on going high. So what will happen is that if the matter is concluded at different stages, the level of penalty could also be different. If, assuming that the company has done something wrong. So in those cases, a lot of companies, when such things happen, they would try to close the issue as soon as possible so that the penalties, which could go as high as 100%, is reduced if the matter is not litigated and closed at the earlier stage. In those cases where the company feels that they are certain to defend their claims or the deductions or the sales or the accounted cash transactions, then they would litigate. Then the assessment will happen. And if they are very confident with respect to the transactions, then there'll be no monetary risk to them, but there'll be, of course, litigation cost which will come.
Abhishek, we'd have loved to talk to you longer, but I'd love to know what provisioning Polycab is going to have to do to adjust for these, these penalties and the interest payout that may potentially keep rising. We'll connect offline and, of course, take that conversation and, of course, take it to our viewers at a later time in the day. But thank you for joining us. We'll take a quick break. GIF Nifty, implied Nifty, is indicating to a positive start this morning, keeping up with global cues and extending yesterday's last hour rally. We'll take a break. We'll come back. Agam is on the other side as we eye Nifty's weekly expiry.
back. You're watching India Market Open. Let's take it straight across to Agam, who's talking about the F&O cues today on the day of Nifty expiry, Agam.
Yes, indeed. So what's really happened over the last couple of days is that, well, it's been flattish largely. In fact, the Nifty has been consolidating over the last 10 days. And, well, it just so happens that we found ourselves a little over 21,600 yesterday. The question is that can we expect a little bit more movement as far as the Nifty is concerned today, considering it is a weekly options expiry. But for now, unwinding as far as your Nifty futures go to the tune of around 2%, and even as the underlying advanced by a little over 0.25%. And as far as the bank Nifty is concerned, again there the picture wasn't any different. We did see unwinding as far as their open interest is concerned, as the index climbed by about 0.25%. Now, we are talking about the weekly options expiry, and in terms of your overall open interest distribution, based on that, we're keeping an eye on a 300 point odd range. Well, indicated by 21,800 call, which has max OI 4 now on the higher end, and 21,500 put on the lower end. That's where you have max OI in terms of puts. So where does it stack up, and what did we see yesterday? Let's talk about the change. And well, yesterday we saw a little bit more writing as far as puts are concerned, but even as the Nifty came higher. Let's talk about stocks then and see where we in fact did see a little bit of improvement as far as your breadth in the futures and options space goes. Z Entertainment, JK Cement and Vedanta saw longs, PVR, Inox and Ramco Cement saw shorts. And in terms of those stocks, we saw unwinding in open interest, well, longs unwinding for Gujarat Gas, Chambal Fertilizers and BPCL, and short covering for Nalco and Delta Corp. But the question is that given that today is that weekly options expiry, what do we do? Where do we see benchmarks go? Well, what do we see in terms of the bank Nifty? Let's get in an expert for today. We have Jay Patel of Investmentor who's joining us on the show. Jay, good morning and thank you so much for joining in. Let's start off with your assessment on the Nifty, and I believe you also have a view on the bank Nifty. Let's just talk about the benchmarks for now, Jay.
So good morning, Agam, and good morning, everyone on the panel. So definitely, we saw short covering really Nifty and Bank Nifty, particularly in the later part of the day. Yesterday, Reliance surprised every one of us, and we saw massive rally covering coming in Reliance. And that may be the reason we saw a short covering really, particularly Nifty chart. Also, if we look at tomorrow's index options selling data by FIIs, we saw massive selling coming in. So this may keep as a resistance for 21,800 and 22,000 levels. Also, the base has been finalized at the support levels, which has been finalized at 21,500. Since last 2-3 days, we saw just an intraday dip coming in below 21,500 and closing about 21,500, indicated a strong base creation at for Nifty particularly. So I believe there may be a short covering really in today's session also, and we may see follow-up buying coming in banking stocks particularly. So that's why I am bullish on Bank Nifty. Also, if we see Bank Nifty, that heavy lifting has been confirmed with HDFC and ICICI Bank taking lead among Bank Nifty chart. So I believe there may be a short covering really in today's trade, and 21,500 can act as a good support zone with put writers data is maximum at that level.
Okay, so how are you playing the Bank Nifty, Jay?
So yesterday, if we saw the Bank Nifty took a good support at 34 exponential moving average, and yesterday's after that we saw a bounce coming in particularly Bank Nifty 47,000 can be a good support, and I believe the stock your index can rise further to 47,800 particularly. So I'm taking a call option, naked call option buying on Bank Nifty's 47,300 call option. I would buy at 492. I would keep a target of around 750 zones and with a stop loss of around 350. So I believe we may see a short covering really in today's and tomorrow's session, and that's why I am bullish about at that level. 47,800 could act as a good resistance, and that may be the reason I am keeping a target of 750.
Okay, buying the 47,300 call on the Bank Nifty, Jay. But I believe you also have another stock idea. This one is Crompton Greaves. Can you take us through that?
So if we look at Crompton Graves chart on a weekly basis, we saw the stock crossing above its 100 and 200 exponential moving average congestion zone. So yesterday also we saw a minor upside coming in this stock, and we may see a good rally coming in January session. Particularly, we may see a surprise rally in next week. So I'm bullish on Crompton Greaves. So we can use bull call spread strategy for Crompton Greaves. We can buy 320 strike price January call option at around 12.30, and simultaneously we would sell 350 call option at 5 rupees. So in and over we have to pay premium of around 20,300. The target which I am the maximum profit which I am eyeing is 22,900. That is 112% upside from current zones, and the maximum loss we can face at around 13,100. That is 62% from current zone. So I'm very bullish, and I think that 327 would be a break-even point for this stock. If we are rising above this level, we would be in profitable zone for the coming expiry. So keep your long position intact in Crompton.
Okay, so a bull call spread for Crompton Greaves, and the advantage of a bull call spread is that you don't lose out on time decay, and that perhaps, and on account of that, it also plays in your favor, considering that up move will give you that kind of profitability. At this point in time, it's a near 1:2 risk to reward ratio, which is also, of course, very beneficial as far as Crompton Greaves is concerned. Jay Patel, thank you so much for joining us and taking us through your views, as well as giving us that idea on Crompton Greaves. And with that, it's back to you, Samina.
Thank you, Agam. It is going to be an exciting day of trade. Global cues are positive. GIFT Nifty is indicating to a positive start. And the euphoria will be evident as we go into weekly expiry for the Nifty. We have with us Nirav Asher, Head of Equity Research at Latin Manharlal Securities, now joining in. And we also have Sudeep Shah, who will join in. Hi, Nirav. You've got a big smile on your face. It's looking like a good-looking market this morning. But you know what caught my attention yesterday was the way Reliance Industries moved. From a flat morning to heavy buying that emerged in the last hour of trade. The stock closed with gains of almost 3%. Do you know what's going on? Do you know what's driving the buying into Reliance Industry? And also, is it sustainable, or was it just one of those days?
Yeah, good morning, and thank you for having me on your show. First of all, I think we'll start off with some developments which have taken place in the recent past. We've seen market expectations from the interim budget. There is an expectation that government may continue its aggressive stance as far as the capex is concerned, and there is a widespread expectation that this amount may go up by 15 to 20%. In fact, it might be in the range of 11 to 12 trillion. So this has triggered a rally across the board. We've seen rally in capital goods space. We've seen in infrastructure related stocks, defense, railways, etc. And yesterday, especially after the first day of Vibrant Gujarat, we've seen announcements which have been coming in, and I think the two conglomerates which have a heavy exposure to Gujarat, especially the Reliance Group and the Adani Group. I think we've seen very, very strong cues over there, and I think the sentiment is playing out very, very positively. So I think it's a combination of a lot of factors which is working out as far as Reliance Industries is concerned. And I think that stock was languishing for quite some time, and I think it's now trying to play catch up in the markets. So having said that, I think we expect the rally to sustain, and this may not be a one-off event as far as the stock is concerned.
Right. Sudeep, technically, what happened on the charts yesterday? Did you see aggressive longs being built into Reliance Industries, which could mean that we could see an extension of yesterday's rally into today?
Yeah, good morning, Tamanna. See, what we've seen in case of Reliance is that after a consolidation of more than, say, 12 to 13 sessions now straight from mid-December, this is the first time we have seen such a gain in Reliance, say a 3% move. And with this, it has closed at its life highs. Now, what we feel from current levels is that the kind of long build-up that Reliance futures have seen yesterday, also at the money put writing was quite aggressive, and a lot of call unwinding also was visible. So I feel even from the current levels, the signs that Reliance is giving is very positive, and this could really help Nifty also. And from the stock perspective, levels perspective, I feel overall till the time 2550, 2570 zone holds, positionally Reliance could head up higher up to 2800, 2840 on the upside. And this is just the beginning of a bigger rally, I feel, in terms of Reliance.
Okay, Sudeep, let me get levels from you. We're on, a day of Nifty expiry. We've seen a rocky sort of week so far. Volatility has been baked in. What are you expecting today on a day of expiry? What are the kind of levels you're seeing on the Nifty and the Bank Nifty?
Yeah. See, in case of Nifty, what we have seen is in the last 5-6 sessions, Nifty has been consolidating between 21,450, almost 21,450 and 21,700 on the upside. And this zone of 21,500 is very critical now, because this is where 13-day exponential moving average is placed, and we have had 4 to 5 retest of this zone in the last 7-8 sessions. So overall, I feel 21,500, 21,530 zone could act as a good support area. And till the time this zone holds, upside up to 21,700, 21,730 could be witnessed. But here again, 21,730 is critical. We need to see that indices close above this level, because in the last few days, we have seen a lot of times when markets have, Nifty has reached around this zone of 21,730, 21,750, there has been a sudden selling pressure from higher levels. So overall, the support zone of 21,530, 21,550 should work well. I feel with Reliance now showing signs of an outperformance. The critical factor today would be the kind of momentum that the IT index, whether it is TCS or Infosys, would be showing ahead of its results. So movement of Reliance would be really critical, and overall 21,550 or 21,530 on the downside and 21,700, 730 on the upside could be the range for Nifty from an expiry perspective. Now, coming to Bank Nifty, this index has taken support yesterday at 47,000, and this is a critical zone. Now, why this is a critical zone? Because if you map the rally from 42,100 from the lows of 26th October till 28th December highs of 48,600, the 23% retracement comes to somewhere around 47,000, and that is where exactly yesterday's low was placed. So this, no doubt, this 47,000 support zone is critical, but it is also important that 47,500, 47,550 levels are crossed, because that is where the 20-day exponential moving average is placed. So all in all, 47,000 to 47,550 could be the range for Bank Nifty for the day, and above 47,550, if Bank Nifty sustains, there could be sustained short covering up to 47,800.
We're going to get into all the brokerage reports that have come this morning. But before we do that, Sudeep, I just want to know your picks of the day on a morning like this. Nifty expiry, but also big results coming up. What would be your sharp focus for the day?
Firstly, we have seen this domestic tourism theme gaining a lot of momentum in the last few sessions. So my top pick from this space would be Lemon Tree. And we've seen the stock doing well over the last several quarters. Even the last few quarterly numbers have been good. And historically, all the hotel themes, these stocks do well in this October to December period. So coming to the charts, there's a higher top, higher bottom formation visible in Lemon Trees on the long-term chart. And the stock is trading above its major moving averages on the daily, weekly, monthly time frame. Also, the stock in the last few sessions, or last 4 to 5 sessions, if we see, the stock has been able to sustain above its 2023 swing highs of 125. So I feel on the downside, 126, 127 could be a good support zone. Until the time this is held, we could see the stock moving up to 150, 155 in the short term, in the next 7 to 10 sessions. The next pick would be IRFC. Now, yesterday, suddenly in the second half, we have seen these railway themes picking up, And IRFC in the last few sessions, if you see in the month of December, has moved from 75 to almost 102 in December itself. But last 15, 20, 17 sessions, the stock has been in a tight range between 96 and 101. And yesterday, we have seen a breakout at higher levels, accompanied by volumes. So I feel from the current levels, IRFC can be bought with 98 stop loss and a 115 target from a short to medium term perspective.
Right. So Lemon Tree and IRFC are Sudeep's top picks this morning, but a lot more to discuss on India Market Open. We'll take a very short break and be right back to take a look at how pre-open is working out.
Welcome back. You're watching India Market Open. It's expected to be a positive start on D Street as we gear up for trade this morning. We've got Mahima now standing by with more details on what brokerages have to say about consumption. Mahima, what do we have? Caution, but still optimistic on the consumption space. At least that's what the brokerages believe.
Right, Samina. So as you rightly mentioned, caution, but they're still positive on the consumption side. We had Motilal Oswal on Metro Brands, where it says that Metro Brands is at one of the top picks, and they've maintained buy with a target price of 15.30. They expect that the revenues will grow at a CAGR of 21%, and they'll have an operating cash flow of 600 crores over FY 24-25. And they're also expecting that Fila and Foot Locker will offer new growth engines, and they're expecting that these two segments will make 800 to 1,000 crore revenue. Now, we also had HSBC on Zomato, where it reiterates buy rating with a target price of 150. They've raised the target price to 150 from 140. They believe that Q3 and Q4 will be a bit muted for Zomato. However, they remain constructive from a long-term perspective. We also had Citi on Titan, where they have said that the neutral recommendation for Titan remains unchanged, and they've raised the target price to 3,900, and they've marginally increased their EPS estimates by 2 to 3%. And they've also said that an additional value for the company's stake in Carrot Lane will be added, and they've mentioned certain downside and upside risk. Where downside, they've mentioned that deterioration in consumer sentiment and lower footfall could lead to downside risks, and in upside risks, they've mentioned that stronger traction to Titan's new products and aggressive expansion strategy will work for Titan. So these were some of the brokerages on consumption sector today.
All right. Nirav, let me come to you on some of those counters, especially in the consumer durable space that Mahima talked about, all of those brokerage reports out today. Anything that you like when it comes to Titan and Metro, some of those brands over there? Consumption has been a story which has seen a lot of divergence. Some brands which cater to discretionary spends doing very well, clocking great numbers. Others which cater to bottom of the pyramid, of course, the FMCG space looking gloomy. So your take on anything that you would pick at this point, especially ahead of the Q3 numbers?
I think we like Titan quite a lot because it's been one of the consistent performers. And as far as Titan is concerned, the jewelry division, of course, continues to do quite well. And in many ways, I think it's a kind of formalization of the jewelry industry, and still there's a huge potential because typically we've seen family jewelers, etc., unorganized sector players rule this particular space. And now there is, of course, the formalization of the entire industry. So I think Titan benefits on account of this demand for jewelry, the authenticity, the goodwill, the brand, etc. And apart from this, they are doing quite well in the watches and the wearable space also, and the eye care segment is also picking up. Apart from this, apparel space is also looking quite good. So I think Titan is the way to go as far as we are concerned. We also like Kalyan Jewelers in this space.
Right. That is pre-open. It's looking good. It's looking good for the street. 21,690, 21,800 now. Of course, these rates are all over the place. But if we get an opening around 21,800, it would be very, very cheerful for the street, especially given that yesterday's intraday low, remember, was 21,448. The breadth will be watched out for. Stocks to watch will be the likes of Reliance Industries, TCS, Infosys, HCL Tech, Wipro. The whole IT pack ahead of numbers is what you want to watch out for. Polycab, if I can pull that up just before we go to Sudeep and Nirav to see there's a reaction coming in on the stock in pre-open, 10% cut. So no surprise there. This is on back of what we've heard from the tax authorities of a pretty large sort of sum of money that could be, Polycab could be anticipated to pay. But yeah, big cut on Polycab in early trade. Apart from that, SpiceJet fundraising plans there, Angel One, Safari, those are the other ones that will be meeting to, of course, get a board approval on fundraising. We'll come back to these stocks in a minute. But Nirav, I want to come to you on Polycab. I'm sure you've been following the news about what's been happening, and we did land up talking to a lawyer early this morning. What I want to understand from you is the IT department has detected unaccounted cash of about 1,000 crores post searches and seizures. And while they had denied rumors that there was a 200 crore penalty or a tax notice, it seems like that number could go up to 1,000. Now, even if they don't turn out to be guilty, I've been told, they still need to provide for the interest of this amount that is outstanding up as long as there is a conclusion to the deal, to the inquiry. How would you approach Polycab? A 10% cut this morning is not looking good.
Yeah, actually, if one were to look at Polycab, it's a leader in the wires and cables industry, and they have a very strong reputation in the domestic market as well as the export markets. Of late, we've seen them do very well in the export markets. And with the exposure to the construction industry, etc., I think there is definitely a possibility of a certain amount of unaccounted sales, etc. So I think with all this going into litigation, of course, it will end up going into litigation, and a certain amount of money will have to be paid under protest upfront. And definitely, it's a dent as far as the reputation of the company is concerned. So I think we are going to see negative headwinds as far as the company is concerned. So it's definitely a negative as far as the stock is concerned. Otherwise, from a reputational point of view, the business has been quite exceptional. Their growth has been phenomenal. But I think this is a dent on the reputation of the company.
Nirav, do you see any impact at all, negative or positive, on the others in the pack? RR Kabul, they also had some tax issues reported last month, Finolex, all of these, or do you think that the whole pack will be something to stay away from? You're saying RR Kabul up in pre-open. So do you think Polycab's loss in that sense will be others' gains, or do you think that no specific one brush for all story here?
Definitely, I think it's going to have an impact because the sentiment generally tends to get a bit, suspicious. People tend to look at it in a suspicious way. So there's definitely a short term, it's going to be a negative for the entire sector.
Sudeep, what would you do with Polycab on the charts? The counter's seen a gap down of 10%. Don't think much can be done, but would you play a pullback on the stock at any point, or you would stay away?
I'll like to stay away because, see, till the time all these issues are not settled, you never know what could come in and how incremental this could be for Polycab on the downside. because this is just the beginning and initial few statements that we are receiving from the tax authorities. So this could even deepen further. You don't know how ugly it could get. So I feel although the stock had a stupendous run in the last 1.5 to 2 years, it could retrace, and it could today the kind of opening it is showing, it is directly going to retest its 200 DMA, which is placed around 4400, and I feel it could still head lower up to 4000 or kind of those levels. So I feel one should avoid traders or investors should avoid at least to do bottom fishing at current levels. Let the dust settle a bit. It's okay if you buy it expensive $200-300, but rather than buying and then regretting later because these are ongoing investigations, it's much better to stay away from these kind of stocks in the current scenario.
Sudeep, you talked about Lemon Tree as one of your top picks and what's happening in the domestic tourism space. What do you think about SpiceJet on the charts? Already a fair run-up. And of course, news flow coming in, more funds are being infused. They're going to have flights to Ayodhya, Lakshadweep, etc. Stock is already run up though. Do you see more upside?
If we see SpiceJet from current levels, I feel the stock still has a decent upside. Say a support zone of around 62, 63 will work well for this stock, and the kind of momentum that we are seeing in Indigo. Now, remember all these airlines are right now having the best time with the kind of rise in the flight tickets that we have been seeing, the average flight cost and the ticket cost. So I feel from the current level, SpiceJet could benefit from this technically also on the daily, weekly, monthly charts. The structure is improving, and we feel that this particular stock could head up to 75, 80 levels in the short term, and 62 levels could act as a good support zone on the downside.
You've been tracking Cochin Shipyard. Very smart move yesterday. 25% gains. Volumes are also quite healthy. On the charts, what's the take on Cochin Shipyard?
See, there's been a big breakout yesterday post the split. Now, if you see Cochin Shipyard prior to yesterday was trading in a, say, 3 to 4% range, sorry, for the past 7 to 8 sessions now. And yesterday there has been a big breakout on the upside with the rise of volumes, at least 10 times its average volumes. So I feel from the current levels, also Cochin Shipyard could head further up to 930, 950 levels. And say a support zone of around 740, 745 could work well for the stock. And the stock is still headed on the upside.
The stock obviously saw this massive rally on back of a stock split. Fundamentally, now that that's behind Cochin Shipyard, how would you play the stock? Fundamentally good enough to buy, hold at this stage?
This is for me, right?
Yes, it is, Nirav.
Yeah. So, yes, I think as we said that the expectations of a more aggressive government spending and defense allocations, etc. So, augur extremely well for companies like Cochin Shipyard. So, I think definitely there is an upside from the current levels too.
Cochin Shipyard for you. Nirav, I want to talk to you about another stock that's been, catching attention for the last couple of weeks is Olectra. Now, we believe they've won a couple of big orders. They've participated in another 3 to 4 tenders. By June 2024, their capacity is likely to become 10,000 buses. Execution, of course, is something I'd love to understand from the company, how they're going to see this through, because they're guided for only about 3,500 buses. But going green buses, is that a theme? Is that a stock or a company you would be looking to invest in?
At this levels, I think the stock has run up quite a lot. So I think we would like to still understand how what is going to be their execution strategy going forward. And I think we'll wait for the quarterly numbers and more the commentary from the company as to how they intend to go ahead with the execution of this kind of orders. But having said that, I think it's definitely an exciting space which one can look at, but I think it at the right price. So we'll wait for some correction or some kind of more clarity from the management before entering this stock.
Sudeep, the stock has done pretty well in the last 1 month. In fact, since its COVID lows, it's given multifold returns, I think 1,500% in a span of 3.5 years. What about the upside? At these levels, is Olectra going to be a counter you would go long on?
See, it's definitely a good stock. The kind of theme that the stock is into, the sector that it is a rising sector, but a lot of this is being discounted now, and it's a big move that has happened, and especially in the last 15-20 days, when from the lows of say 21st December, when the stock was around 1180. The stock has moved to almost 1750 right now as we are speaking. So it's a 55 to 60% move in the last 15 to 20 sessions. So I feel that one should wait and watch, because in these kind of momentum, you could chase, you could buy, but sometimes you may even get stuck in these names. So this is definitely a good story. I would, if it dips to around 1550, 1560, I would like to have a look at that. But at current levels, I would like to avoid it.
Right. We spoke extensively about IT at the start of the show, but as we're nearing opening, I think I want to get a view from Sudeep and Nirav as well on what we can expect on the IT pack. It's going to be on focus. The IT index has shown strength despite, a prediction of not a great Q3. Nirav, I want to start with you on what your expectations are from the IT sector on a whole and TCS Infy specifically.
As far as the IT sector is concerned, we are starting off with the IT heavyweights, and I think the overall expectation is already discounted that it's not going to be a great quarter as far as IT pack is concerned. But we've seen global headwinds, we've seen all these challenges which the sector has been facing. And particularly from a stock perspective, I think what we need to see is that the most of the pessimism seems to be overdone as far as the stocks are concerned. Most of it is factored into the valuations. Now, what we have to see is that the weakest link in this entire chain is going to be Infosys. What is going to be the commentary going forward with respect to Infosys? And I think TCS is likely to perform quite well. And the strongest link is going to be HCL Technologies, where we've seen already a good momentum in the stock price yesterday. And I think Wipro is likely to be more or less flattish sideways. So it's like the market has concluded that all these stocks are likely to remain range bound until and unless we see a change in the sentiment as far as the entire sector is concerned.
Sudeep, it's looking like it's a good start, barring, I think, 3-4 names in the Nifty. Everything's in the green. One quick stock of the morning for you.
See, if I have to pick up one stock, I feel the capital goods space of late has been doing well. Larsen, ABB. My top pick here would be Cummins India. It has been on a decent uptrend. Has not blasted like ABB Larsen has been doing in the last few sessions, but I feel this stock is well placed, almost at the cusp of a breakout zone, and from the current levels till 2000 zone holds on Cummins. Levels of 2100, 2130 could be visible on the upside.
Yeah. Sudeep, just your take on the IT pack and the Nifty IT looking like it's going to have another good day ahead of the numbers. What would be your favorites here? You think still some steam left in Coforge, which looks like it will lead the pack today as well. And any views on Infy TCS?
Coming to the mid-caps side first, I feel Coforge and LTTS both could do really well, because barring all the other mid-cap ITs yesterday, this two stocks were outperforming. And for Coforge, overall the support zone now becomes 6,000 on the downside, where the 20-day exponential moving average is placed. And it all depends on the results today of these large caps also. And this would have a big impact on the moves that the mid-cap stocks also would have. So overall, Coforge is good with 6,000 stop loss. And I guess better out of Coforge and LTTS would be LTTS, because that stock is on an uptrend, and it's almost challenging its previous life highs around 53.60, which were registered on 19th of December. So LTTS has a good support at 52.50, and till this zone holds, upside up to 5500, 55.50 could be visible. Now, as Nirav also mentioned that if you have the IT space together, Infy, TCS, HCL Tech definitely will be an outperformer, followed by TCS and Infosys, because even the relative strength model suggests that within the IT space from the large caps, HCL Tech is an outperformer, and within TCS and Infosys, I would choose TCS as the structure is much better on the daily, weekly, and monthly time frame compared to Infosys.
Right. Sudeep, Nirav, stay with us. We'll quickly just do a check on how the markets are opening up. 30 seconds to go, and it's expected to be pretty solid opening on D Street. GIFT Nifty was indicating to a positive start. Pre-open has also closed in at a positive beginning this morning. Nifty options expiry is expected later today, so the markets may turn volatile in the second half of trade. But the handover from Wall Street and Asia this morning is positive, and that's what bulls will be taking some heart from. The VIX is also declining in yesterday's trade. The PCR was slightly higher in yesterday's session, indicating a little bit of an uptick in the bearish sentiment. Bank Nifty will be important to watch out for. It did its job by contributing sharply to the Nifty in the last out of trade yesterday. Well, that's the start in kissing distance of 21,700. Oh, there you go, 21,700 on the Nifty 50. It's a critical level. Remember, 21,700 to 21,750 is what's going to be a range that markets will be taking heart from. Bank Nifty as well looking good, moving in line comfortably above 47,600, 0.5% on the Nifty. Broader markets moving in line, the mid cap and the small cap index both trading with gains pretty much in line. Small cap index has been outperforming the benchmark for the last few days and continues to do so by a small margin in early trade this morning. But 21,700 on the benchmark is what we're getting excited about. The breadth is solid, the advanced decline ratio clearly in favor of the gainers. You've only got two stocks of the Nifty 50 that are trading weak, and we'll highlight those because those are fewer in number. Infosys trades flat, no big sell-off ahead of numbers, just a little bit on the sideline for Infi. HCL, which is expected to report one of the better numbers in the sector, is trading a little quiet, and you've got a little bit of a cut on Dr. Reddy's, 1.5%. Be interesting to know what's happening on Dr. Reddy's in a few minutes. That's the screen. Auto is having a field day from the look of it. Hero MotoCorp is up 2%. Aisha is looking good. M&M is up with gains. OMCs are looking good. So BPCL, HPCL counters that sold off yesterday are actually keeping themselves together this morning. I want to just try and find Reliance Industries very quickly on the screen, which I'm struggling to find, but there it is, 0.5% on RIL. This was the big mover in trade yesterday. Continues to see some buying in trade. 0.6% on RIL is what we have. ITC is also slightly higher. Auto is looking like the big gainer. Banks are looking pretty good. Pharma is seeing some buying. I think barring the guys are going to be reporting, which is Infosys and TCS, most counters are in positive territory. HCL, of course, seeing a 0.5% cut, and Dr. Reddy is down 2%. But Tamanna, it's a good-looking start. It's a happy Thursday.
Absolutely, no doubt about it. And that to think of it this way, it's the day that kicks off the Q3 result season. So there's positivity there, and overall, some faith in what corporate India is going to deliver. HSBC has a good note out, a positive note out on the autos. That could be one reason why you're seeing that upswing over there. But let's look at perhaps a counter which is not performing. Why perhaps? It's on a 10% circuit on open. Polycab is doing badly as expected. What looked like a 200 crore rupee tax evasion case is now maybe up to 1,400 crore rupees in tax evasion that the company will be fighting. There has been no fresh response from the company since the IT department's details talking about a wires company, which is Polycab, came out. So we'll wait and see if that happens. I just want to quickly see what's happening to peers. RR Kabul, Phenolics, what are they looking like in today's trade? And RR Kabul also looking like a bit in pain. Remember, they had a tax evasion case or search and seizures occurring last month, and Phenolics uptick in the green. SpiceJet is one which seems on a great flight trajectory over the last couple of days. And remember, the stock gained 5% yesterday, 2.5% up in opening as well after their over 2,000 crore rupee fund infusion, flights to Lakshadweep and Ayodhya, which the management has announced. We should try and, we are trying to get a word in with them, looking at what their expansion plans look like. I will pick up Phoenix Mills as well. Business updates were out, and the retail collections are looking good on the face of it. And the stock up in the green, but no spectacular performance seen there. Nuvama is another one. An interesting story out from Nuvama yesterday. They have a 50-50 JV with Cushman in Wakefield, where they're going to create opportunities for retail investors to invest in commercial real estate. So more details on that will be interesting to see, as well as Nuvama. Nuvama Wealth. And Metro Brands is one that I would pick up. Metro Brands has been named as Stock of the Year by Motilal Oswal. They are seeing a buy and a target of 1530. So quite a upside there. Just one more, Kalyan, because if you're going to look at the consumption space and where that is going, Citi has a target of 440 on Kalyan Jewellers. That stock doing fairly okay. But it's a day of a lot of counters in the green today, Samina.
It's looking good. The market's all moving in line with the benchmark. Sectorally, real estate has hit a 52-week high, so realty is seeing aggressive buying. Gains are being led by Sobha, Oberoi. Sobha has hit a fresh high of 1365. The stock is up 4%. DLF has hit a 52-week high as well at 801 rupees. So real estate leading the pack. They were outperformers in yesterday's trade as well. The realty pack was up 2%. The buying continues this morning, so the trend really follows through into today's session as well. That sector is leading the way up. On the other hand, Network 18, which had hit upper circuit yesterday, continues to see buying today. You're seeing an 8% move on Network 18, so adding to those 20% gains from yesterday. E-Strip Planners is up 5.5%. India Railway Finance, so anything in the railways pack as well, ancillary or core railway, is all trading firm. IRFC is up 4%. You've got Electra Green Tech, which I talked about this morning, was a gainer yesterday, continues to add to its 40% rally this month with another 3.5% up move in trade right now. Manappuram Finance, now remember the Asirvad, the IPO has been delayed. On back of that, the stock was getting beaten down yesterday. Markets clearly seeing beyond that now. The stock seeing a recovery of 3% gains in trade right now. So that's largely the market texture. It's actually good looking market. There is healthy buying across the board. There are some stocks that are on the losing side. Tamanna has already mentioned Polycab. Cochin Shipyard is down 3.5%. Dr. Reddy's, I mentioned, was looking weak and it continues to sell off. So at the day's low point on Dr. Reddy's is what we have. Gale is weak. Delivery was in focus yesterday, some weakness there this morning. Infosys is down about 0.7%. Metals are looking slightly weak, but generally speaking, and Finolex Cables, Tamanna mentioned how the whole sector would be bearing the brunt of a GST notice for Polycab. Finolex trading flat to slightly lower in morning trade. So it's the market. And Sudeep, any trades you picked up on as we speak? The opening has been in line. The Nifty comfortably around, oh no, not so comfortable just yet. 21,700. Would you go long? Sudeep, you're on mute.
Yeah. See, I'll wait for at least the next 10-15 minutes to see how the initial data is shaping up in terms of option writing and the open interest part. So generally a poster gap up of this magnitude, and see once again we are heading towards that zone of 21,725, 21,730, which I was just referring to in the morning. And from that zone, there have been previous instances in the last 4 or 5 sessions where there have been sudden selling pressures. So 21,660, 21,680 zone post this kind of an opening would be a good entry point, because initially in the first 5-7 minutes we have seen some kind of put writing happening in 21,650 strikes and 21,700. So a good entry point would be closer to 21,660, 21,680 zone, and on the upside about 21,730 once Nifty spot sustains, there could be a sustained short covering move up to 21,800. And in the morning, like in the first 15 minutes, what we are spotting is Cummins, which we have discussed earlier in the show, that is doing well. That could still be bought. Even Lemon Tree has been doing well, and also IRFC, which is closer to 108 levels, that could be trailed with 103 levels for this up move up to 115 on the upside.
Nirav, opening comments on the way the market is panning out, showing a thumbs up perhaps to what Q3 is going to look like. IT now seeming under a bit of pressure there. But on the Nifty, you're seeing this zoom in auto. Would you buy into it at this point?
We would like to be stock specific as far as auto is concerned. And in auto, I think the two-wheeler pack has been doing quite well. So our preferred pick over there remains Hero MotoCorp. And we would also like to look at Bajaj Auto. And in the infrastructure space, we would like to look at stocks like Adani Ports and SEZ, which has been doing quite well, and L&T. In pharma, we would like to look at Cipla, which has been doing particularly quite well. So we'd like to be stock specific in this market.
I just want to ask you about Dr. Reddy's, since you talked about Cipla, Nirav, and they have had a limited drug recall, batch recall in the US. Perhaps that's why you're seeing that kind of a cut. It's for an immunosuppressant drug, and they've said it's a precautionary recall. Dr. Reddy's is something on your radar, or would you avoid?
Temporarily, there would be an overhang on the stock, so I think we would avoid it for the time being. But otherwise, the fundamentals remain strong. So we would like to have a look at it post the results.
Right. Nirav, just another few smaller names that I want to talk to you about. I don't know if you track any of these, but anything on Avanti Feeds at this point? The stock has been doing pretty well in the last couple of days at least.
No, but we don't track the stock, so
right.
I won't be able to comment.
Right. And also in terms of banking, we've seen a bunch of business updates from the I mean, when I say large in number, PSU banks, Bank of India as well, reported pretty solid business updates. And the stocks have reacted quite well. I mean, they've taken it in good spirit in that sense. Ahead of earnings, would you load up on any of these PSU banks?
Yeah, we would like to look at a few banks like Canara Bank or Punjab National Bank, Union Bank, etc. So 2-3 names which we like at this point in time. Apart from this, I think we like a few regional banks like Federal Bank or DCB or Karnataka Bank particularly. So our focus is over there on that space. Yeah.
Sudeep, Dr. Reddy's, it's under pressure this morning. Fundamentally, Nirav's given a view and so have you. But beyond the frontline pharma names, anything in tier 2 that you'd probably initiate a trade on?
See, if you see, apart from these frontline names, there has been one name which has been doing well in the last 1 month or so, and that is Granules. So overall, if you see Granules in the last few days, it has just shown some signs of consolidation. But over the period of last 1 to 3 months, you see that it has just formed a good base around 380, 385 zone. So I feel on dips around 385, 390, the stock can be looked upon. And we are seeing that the stock could move up to 440, 450 in a short-term span.
I just want to talk about IRFC. It was on Sudeep's list. Target was 112. Stock is doing well today at the kind of up move we've seen. Sudeep, are you still bullish on IRFC? And a view on the finance pack. Look at Shriram Finance this morning, M&M Finance, L&T Finance, all up in the green. They're having a pretty good day.
See, IRFC, I feel that the targets are still far away. This is just the beginning of a fresh rally. So one could trail the positions with 102 as a stop loss, and upside could be up to the first target that I am looking at from a positional perspective is 115. And above that, it could just be riding the rally. So one should hold IRFC and with a revised stop loss of 102. And coming to the finance pack now, Shriram Finance over the last 5-6 sessions has tremendously outperformed the frontline markets also and all the other peers also. So there has been a good breakout that has been witnessed above 2100 levels, and this stock has continued its momentum on the upside. So I feel even from the current levels till 2200, 2180 zone holds, the stock could head up to 2400, and I would not be too bullish on M&M Finance given the kind of structure that the chart is showing on the daily, weekly and monthly time frame. But definitely L&T Finance, which has had a very good run over the last 1.5 to 2 months, is once again sustaining at higher levels and trying to make a extreme short-term bottom or say consolidate and start moving up around 165, 166 levels. That could be a very good support, 165. And with that stop loss, it could be picked up as a extreme short-term trade for a target of 175. So 165 could act as a strong, at least support from the next couple of days perspective, and the stock could head up to its previous highs of 175.
So talking about L&T Finance, Shriram Finance is also up 5%. They've been raised to buy from neutral by Goldman Sachs. Price target has been set to 2,758. The stock is up 5% as we speak. That's a almost 25% upside from its current levels. Infosys is down 1.18%. It's a top loser in the IT pack. GAIL is also down over 2%. They have been cut. In fact, their price target has been reduced by CLSA to 165. Antique, though, on the other hand, has also downgraded them from a buy to a hold. Torrent Pharma is up about 3%. It's the most that the stock has seen in over 7 months. But the stock of the day is Polycab. There has been lots of information and news coming through on that counter in the last few days. And we now believe that the IT department has said that they've initiated searches and seizure operations against Polycab. And we've got Harsh who's standing by with more of that. Harsh, lots of back and forth. The IT department says there's a big breach. Polycab, of course, denying those rumors for now.
Well, yes, so I'm going to try to break this down a little bit more, trying to let me explain as to what really leads up to a search. One is the IT department must have a reason to suspect that there is some undisclosed income which the company has been subject to over the last few years. And then only thereafter would the raid or the search be a valid search. So that's your first line of defense when it comes to Polycab. Second is they must send all the documents with regard to the evidence. They must accumulate them, list them down, and they must send them to Polycab as well. So Polycab will have an entire list of documents which the IT department is going to rely on when it comes to finding this undisclosed income and the reasons for that. Quickly moving on, the income tax department will thereafter conduct an assessment of the last 6 years of their income tax returns. So the previous 6 years plus FY24 will all be reassessed, and the income tax department will thereafter take out or provide a tax demand for these 7 years. Thereafter, interest will be computed on the tax demand depending on the period and the amount or the difference of the income tax or the shortfall of the income tax, if I can say. And last off, there will be a penalty. 50%, up to 50% for misreporting, almost goes up to 200% for underreporting. Likely, in cases of search, it's underreporting which gets captured. What can Polycab do if they believe that the search is not a valid one? Immediately, they will file a writ petition with the High Court. So that's one thing that the company can do from their standpoint. Secondly, they will obviously appeal post the assessment for the 7 years. They will have the option to appeal with the Commissioner of Income Tax Appeals, which is the first appellate authority in case of income tax, right? If the Commissioner of Income Tax Appeals confirms the demand, interest and penalty, only then typically have we seen companies providing for it. So the provision will come much after. At the moment, of course, we'll have to wait and watch as to how Polycab responds to this.
All right, so Polycab now 15% down. That pain continues. We're taking a very short break at this point, but stay tuned. On the other side, we have Maruti Suzuki's R.C. Bhargav talking about the company's big expansion plan. It's an interview you must not miss. Back on the other side with that and more.